Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, December 5th at about 2:30 p.m. Eastern. Well, the S&P 500 is edging higher today on pace for its fourth straight winning day as traders digested inflation data that could provide further incentive for the Federal Reserve to lower interest rates next week. Traders are pricing in an 87% chance of a cut next Wednesday, far higher than just a couple of weeks ago, according to the CME Fed Watch tool. And on that note, fingers crossed that happens, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 spider symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And please know, if it's not a fact you're familiar with, when the S&P 500 goes higher, moves higher, 3 out of 5 stocks will follow it. If the S&P 500 is moving lower, 4 out of 5 stocks will follow it. So we keep an eye on the S&P 500 spider, or its ETF, the SPY, which everybody can get on their screens, as a factor to see how the market, what the mood and manner is of the entire market, because that affects many times how stocks trade. So that's what we do. Okay, so today when I captured this chart right here, this little candle there, if you can see it, the SPY was trading at 686. That's very, very close to the all-time high right here at 690. So it's making a move to try to get back up to this all-time high back here at 690. Now, we know that it's after falling down earlier in November, the SPY is back here above its major moving averages with the 20-day, the red line coming in here at 674. The 50-day, the green line coming in here right under it at 672. And of course, down here at the 200-day moving average, right now it's trading at $617 and change. Now, we know you can't see it on this screen, but we know that in April of this year, the market rolled over and the SPY dove to its April 7th low. Everybody, it seems, had an April 7th low. The SPY rolled down to 482. Then rebounded and gradually started climbing higher, excuse me, up over its 20-day moving average, and pretty much walked up that red line all the way up with a little fall here in October, all the way up here to its October-November all-time high at 690 and $690, we can call it. And that move from the April low up here to the October high was a 43% gain. So that's one reason also that you see the market kind of hesitating here. It can't go up forever, in the short term at least. So we're seeing it kind of stumble here as many stocks become overvalued, and it's the way it is. So it just needs to maybe take a breather, and it has kind of taken a couple recently. So it got up to its all-time high up here, again at 690 in October, then fell down to the 50-day moving average from there, then rallied back up here, then rebounded to 685 right here, which is the resistance it's dealing with right here. Then it fell down through both moving averages down here, down to 652. And we can see if we look left on the chart that there was kind of support at that level, maybe a point or two higher, but pretty much support at that level. So that's a good thing. And then it held that October price support, then rallied back up to where we are now at 686. So going forward, this is going to be a very important next couple of weeks here as we see if the SPY, can it break? The question is, after all of the uptrend that it's been creating since April this year, can it now keep on going after taking a couple of we'll call them breathers, or pulling into a couple of rest stops here. Were these rest stops enough rest for it? Can it break out here to new highs, or is it does it need to come back down again and have a little bit more profit taking come in? That's going to happen in the next couple of weeks, and we'll find out. So right now, looking at where our potential support here is at the 20 and the 50-day moving average at 674, 672, then down to this low at 652. August pivot down here at 619. Then we have the 200-day coming in here at 617 and on down. So again, we have the Fed meeting next week, as I mentioned in the opening words. So that's also going to be a big mover of the market next week, I'm pretty sure. So stay tuned. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This follows the NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. It has all the Magnificent Seven in it. It's got Meta, Netflix, Apple, Tesla, this whole group. Now, when I captured this chart today, the cubes were trading at $625 and change. It is down about 2% from October all-time high back up here at 637. This was the all-time high, and of course the Qs, with a lot of tech stocks in it, they like to go higher, more dramatic than the SPY. It's much more dramatic. Then it goes lower than the SPY. I mean, the same kind of pattern, but the Qs do it in a big way every time with quite a bit of drama. So and then that's the fun thing. So anyway, it's trading back above its 20, the red line, and 50-day moving averages, which are both coming in right here at 611. We know the 200-day moving average is down here at 547. Now, the Qs, as you remember, rolled over earlier in the year. We can't see it on this chart, but it dropped to the April 7th low of 402. Then it rebounded, the Qs did, and from there, much like the SPY, it walked up its 20-day moving average, a few little slips here along the way, but basically did a great job of walking along that 20-day moving average. The first week in October, right here, it slipped down a little bit, but then it rallied back up and popped to these new highs up here at 637, and then fell to its November low down here at 581, then rallied back up to where we are now, again at 625 and change. And still, one reason too it's going to take a rest stop is because this, this uptrend from the April lows has run up 49%. So it's hard sometimes for a stock's fundamentals to keep up with something that dramatic. Anyway, going forward, we have resistance here right where it is. See, it's at 625, and this area here of resistance right here that you can see in the end of October, November, this was also at 625, so we could see a little bit of resistance here. Then, of course, up to the highs at 637, that will potentially be some resistance up at that level. We have potential support down here at the 20 and 50-day moving averages coming in at 611. We've got, again, we've got this November low at 581, potential support right here. Then we have the August, September, and August, the lows that are coming in here at 552, 559, and we have the 200-day moving average down here again, down at 547. So again, in the coming week, it could get a little hectic out here with the Fed watch and interest rates potentially, hopefully being lowered. It could get a little hectic though. So again, keep an eye on your protective stops and trade wisely. Our final chart today is a chart of the Global X Uranium ETF, symbol URA. The URA has 64 holdings. Top holdings include Cameco Corporation, Oklo, Uranium Energy, Centrus Energy, NextGen Energy. Now, when I captured this chart today, right over here, the URA was trading at $48.25, and as you can see, it's hitting its head right here on the green line, the 50-day moving average, which is coming in at $48.30, so it's right there. We see the 20-day just below that at 45 and change, and the 200-day down here at 37. Now, like every other asset I know of, the Global X Uranium did hit a low in April, and it actually stopped at right around, you can't see it on this chart, but it touched 20. Then it gradually climbed higher from there, all the way up to where you see this high here at $60 up here. So from 20 to 60 from April up. Then it dropped. It was getting very overbought here. And you can look at the RSI. When you see the RSI going above that 70 line, you know that whatever it is overbought, and it may. Probably will come down a little bit pretty soon. It's getting overbought. So it got up to 60. That was great. Then it fell down down below the 20-day, rallied back up, and then fell below the 20 and 50-day moving average down to right down here to 40. Okay. Then it rallied from there to where we are now, back up here to $48.25 exactly, actually, but we'll just call it 48. So what I do here, I do like the support from prior consolidation that at least gives some support down here just above 40. I like that it's very orderly because I think things are going to get a little more hectic in the next couple of weeks, and the URA is orderly here. I also like the fact that energy usually trades independently from the broad market. And we know that energy is going to continue to be very, very important. I'm looking at this, if it turns out that way, potentially as a longer term trade. So we'll see what happens. So in the coming week, if the market is behaving reasonably well, and if the URA can climb above the 50-day moving average, which is coming in right here at 49, if it can climb above that 50-day moving average, I will buy a position for my trading portfolio with a stop, and I'm going to put it down here at 44.50. Now, you may want to raise it. That's entirely up to you, but I'm going to put my stop at 44.50 because I'm considering it as a little bit of a longer-term trade if that works out. So if and when the URA closes above 53, which will mean that it's filled this gap right here, if and when the URA closes above 53, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the URA in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, How to Bottom Fish Like a Pro, you'll discover a simple yet profitable strategy that all traders and investors want to know. And that is, of course, how to buy low and sell high. I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Now, our new low price for this program is only $199. And by the way, some of my trainings listed here are only $59. So that would be how to read charts and 3 winning setups. Those two are only $59. And when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. From our ever-popular 7 Steps to Successful Trading to one of the very, very popular programs, How to Swing Trade Successfully, how to trade the trend to profits. I love that. How to read charts, great for novices, anybody who wants to brush up. 3 winning setups, great short-term trade setups. And how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or simply, easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.